Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thank you, Marty. Good morning. And how we doing in YouTube today? All right, thank you. Okay, everybody. Well, let's get going. Uh, Good morning again. Welcome to the Traders Lab. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory, using the volume profile as a chassis in an attempt to align with the current market condition. It's also based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube if you're interested in that, and there is no cost. Um, it is a group of like-minded traders that have come together to leverage their collective experience. It doesn't matter how long you've been trading or what you've been doing. The Trader Lab is really about helping traders understand the business they're attempting to be in, and to understand how not only how the market works, but how the business might work, and then to help traders create their own trade plans. And I've shared 60 PDFs of structured trades that you can use as the basis of extracting a statistical edge. The business of trading is really based on statistics or gaming theory. It is not predictive. There's no confirmation. There's none of that, unfortunately. What we have is only probability is one thing happening over the other, and that's really how casinos operate or gaming. So the idea of trading is to only interact with the participants when you have a statistical edge. And the outcome of every trade is random. And if you consider today as a good example of fundamental inputs or news inputs creating a lot of volatility, news algo activity, and for retail traders, I think it's a rather difficult environment to operate in. So there was a lot of posts this morning in Trader Lab about adjusting for volatility, the condition of the limit order book, the thinness of the book, how the market tends to overshoot location. So a lot about risk management, trade plan, and also honoring loss limits. Today's the day that no matter the best intentions and the best plans, if the current environment of the market is not in alignment with your plan, your job is to follow your plan and accept the random outcome. And this is an outlier in the sense of the volatility, the range, the thinness. And when that happens, it doesn't matter how good or what kind of edge you have in your plan, you are going to take stops because your job is to be here for tomorrow, not to try to, we all like to make profits, of course, that's the point. But the idea is in order to be in the business, you have to also manage risk. And speaking of risk, let's talk about that. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is based on market mechanics, building out trade plans, and also understanding that we're in an environment that's 100% random 100% of the time. Now, you might consider maybe in your opinion, and I'm only speaking from the time I've been doing this, I worked many years on trying to create predictability and confirmation. And I thought I could do that, a lot of different ways with a lot of different approaches, including trading systems and the rest of it. And what I found was that I couldn't accomplish that. I also always had winning trades. We all have winning trades. But what I didn't understand, it wasn't about fixing and getting more winning trades, which is logical. It was about statistics. So in spite of patterns that I recognize and indicators that seem to work really well a lot of the time, winning trades, I didn't have an edge. So you can have what you call a winning trade. you could have a 60% or even a 70% win ratio, but you could still be losing dollars because if you don't make up for the losses or your risk is larger than those winners, it's not the winning. It is what you net and the range that you trade. All these things are part of trade plans. What I've found for me, and it's not a recommendation, is that I want to trade the larger rotations. And the reason for that is I take stops just like you do. Every trader takes stops, their overhead and costs of production. But it's not the win rate. You can have a low win rate, but when you get a winning trade, if you're trading for large rotations, it takes care of those stops. Do you know where your edge lies? It's not frequency of winners, it's yield. Can you trade rotations that still pay you after you pay the gamblers? That's the key. Now, this is what the 60 PDFs look like. These are actual trades that I took. These are broad strokes. It'll give you ideas. Then you can come to Trader Lab and you can work with other traders who have taken these ideas, and everybody finds their groove. In other words, your psychological alignment, the range you can trade, and the market mechanics to help you achieve that. So that's what's in Trader Lab, plus a library of webinars. And if you're visiting in YouTube, there is a link down there, and there is no cost. And speaking of visiting, effective this coming weekend, you will need to be verified to access the Bookmap server. Now, we've been doing that for a long time at Bookmap in an attempt to reduce phishing. In Discord, you're going to get the bots and everybody in there impersonating and all the crazy, right? Well, in order to tighten this up and make the community a better experience for everyone, you can use this QR code to get to the link. There is no cost. If you're visiting in YouTube, scan the QR code and register. If you're a current subscriber, just use your email address that's associated with your account, okay, that's connected to your license key. Now, if you aren't subscribed to Bookmap, or you're a Think or Swim Bookmap user, you just need to create a free digital registration. So, and it'll take you to, when you come in using this verification, you'll come in and it'll say verify. So remember, after Saturday, you will not be able to view anything in the Discord server. You won't have access to the streamers, contests where you can win free Bookmap subscriptions, special events, special ideas and things that come in there, and the Trader Lab. So take care of that right away. I know we're all busy doing other things, but if you want to visit Trader Lab or take advantage of all the additional education that's available at no cost in the Bookmap server, stocks, options, crypto, order flow, other streamers, besides me, do it today. Put it on your to-do list. You don't want to miss out. And I think the cost is pretty good, as they say. No cost. That's my mother always said. If it doesn't have a cost, free is good. So there is no cost. So, what can I tell you? Now, this is yesterday's higher time frame. Now, remember, we had the shorts here, and we were looking for this as our outside target, but take the stops out, under here, which we did on this day. Okay. And then we closed up here. Higher, and our target yesterday was 5,300 and 53.25. So that was the long targets for yesterday. Now, the gap is a surprise, 54.38. So we have, I should say, this was taken this morning during the ETH. So the market was trading up here. Big gap. Well, in a gap like this, there's a couple things that can happen. First of all, what's really important is we have stops sitting over this high, and over here. This was rejected. This is a higher time frame or intermediate time frame retail price. Remember how the market works. It's a shopping experience. If it's something is too high, we're going to find what's too low, which was this. We tested, we didn't get there. We got close, no cigar, no precision. And then we came back to the high volume for all of this. Now, this is as of yesterday. That's why the 5,300 was the target coming up. And then in this 2-day consolidation, again, balance, this was the target. That's what sets up yesterday. Then with the gap, 54.28 is our support-ish, okay? And where's our low of the day? I don't know yet. I haven't seen it, but we might have come down there. Don't know. And then, so this is support. And this morning I tried a short or two to come here. And as they say, no bueno. Then the stops are here, here, and this would be the ultimate test back to there. So that's the lay of the land, higher time frame. I hope you guys are getting something out of this. By the way, if you have questions, post them. This is not a thrilling day for me. I follow my plan and I try to adjust. I drop size. I do whatever I have to do to try to participate. And either it's works out or not so much. So for me today, when all the debris settles, I should have just slept in. But that's trading. Now, it's very important. I talk to traders all the time. I want to mention this. Trading is an emotionally volatile experience. There's days we do things and it's like magic. Our plan and the condition of the market are aligned. There's going to be other days where the condition of the market is not in alignment with your plan. Now, unfortunately for us, we don't know that until hindsight. So that's where loss limits come in, and emotionally we're going to be frustrated by it. But in this business, you really need to step back from how you feel, and it's more about what you do. Your feelings are great in hindsight. I always talk about Hyde, Jekyll and Hyde. Hyde is very good in hindsight. You should have done this. Why didn't you do that? And you're being scolded by this other part of your persona, if you will, the critical self. And I'm not a, psychologist or any of this. It's not my thing. But what is my thing is to understand how we respond and to listen to the self-talk. And that's what journaling is about. Your critical self, your judgmental self. It's really easy in hindsight to be judgmental in this business. Yeah, I should have waited. I should have, I had, all this kind of stuff. Well, that's normal. It's part of being human, and you are going to hit your loss limit. Now, here's how do you grade yourself on a day like today? I'm going to tell you what I do. And I'm not saying this is right for you, but I used and still have those feelings. But I realize I don't have control over the outcome of my trades. I only have control over what I do. Now, what I do most of the time works really well. Other times, it's just not going to work. And when I have news inputs coming in, I'm going to try to cut my size. We knew there was news this morning, and that Treasury Secretary was going to be talking, and tariffs, are on the agenda. So high risk day to trade, and the book was very thin. We'll look at that also. When the book is thin, it's very easy for the market to skid stops and have extreme moves that go outside of levels. So as this is happening to you, if it is, you got to have something in your plan that says, time out, what's going on here? And then you either, again, adjust size, don't trade, wait until things mellow out, or whatever. Or you hit your loss limit and you just say, I'm done for the day. Let me review this and study it. And if you don't have a solution for it, you are a winner, not profitable, but you are a winner if you followed your plan and honored your risk management. If you don't do that, that's not going to help you with sustainability. I want to remind you that because everybody has losing days, losing trades. It's just the way it is. So if you're having frustration, it doesn't mean that you can't do this business. It means you need a plan that respects risk and has some circuit breakers in it. I will tell you, for me, I have it set up with my clearing broker that if I go off the rails, I have a loss limit. And it doesn't matter, I've been trading 46 years. We are all subject to the lunatic under the hood, which is Hyde. So just mentioning that to you. Nobody's immune. It's part of our humanity. And it's also a problem for us to manage our emotional states in a climate like we're in today. And if you didn't, that's okay. But your job is to honor your trade plan. And if you didn't do that, that's what you need to work on. Not the fact you might have hit a loss limit. And if you violated your plan, then you got to work on that because that'll keep you in the business. If you violate your plan, that behavior will take you out of the business. It's more important to know when not to trade. And in hindsight, you'll know that. But we don't know it going in. So, gap. What does that suggest? Longs. All right. Now, there's a couple possibilities. When we get a gap like this, there's two possibilities. Huge gap, right? So, and the market, the gap is suggesting out of balance, and the market needs to find too high. Doesn't know. So it's going to try to find too high. So what we look at is levels. And that's all you got in the auction. What happened last time we were up here? Okay. Well, we have this location here. This is a high volume node in the highest time frame. It's just a level, 62. We have the ETH high. Over a 90% probability we'll get this thing. And we had liquidity sitting up at wherever it went, 55, which you will see. So we have liquidity at 55, big liquidity. You'll see it. You can't see it on here now because of this. And then we are looking for longs as the trend. However, what typically happens or can happen, it's called responsive selling. So a counter trend trade is to take advantage of the longs who might take profits. My first trade was a short. And let me show it to you. Now you're going to see what happens. And what happens, happens. You know, it's kind of like what happens in Vegas stays in Vegas. Well, here, because this is a stream, what happens here is just what happens. So this is called VPOC migration. I know the market is on a rip. I know we're responding to news. And the term responding has to do with this trade. It's looking for a short for profit taking for a counter rotation. And my target was this. Because this is the retail price, 54.28. I just want you to see where this stuff comes from. This. So if I open higher, I'm looking for it to come back to 54.28. That's my target. Okay? So open higher, come here, and then buy it to continue and take the stops out. So that's my plan. And then whatever happens, you know. Say la guerre. So now I'm looking for a short. I got my liquidity. I have my VPOC migration. This is the new retail price. This is too low. I call this a variable high volume node. Now you see me do this all the time. So I have a plan. I just follow a plan. You know, and there's some days you look at your plan and you look at the market and you're going, what's going on here? You know, and I'm always asking myself that question, what's going on? Because I'm trying to discover what's going on. So I have the gap and I'm looking for the selling. So right here, I get my VPOC migration. I get my break. That's my trigger. I'm under this. You've seen this before. Let's watch it. Micro high volume structure, variable high volume node is here. And this is where I take my first short. Very excited. And what I'm looking for, and here's the short, right? Here, right? Trigger, test, micro high volume is there. Entry was here, stop here, going for out the bottom. Get these guys. Okay, I get risk neutral. I'm thinking I got you now. I'm going for where? This structured trade. Now, VPOC migration. What this says, and I did a specific webinar on VPOC migration. Now, the thing about VPOC migration, it is specifically, let me just say this, has more value in the open because it is the current measure of the auction, and that's really all we have other than the ETH, which is the last auction. Now, I know this is the ETH high, and I know there's over a 90% probability that either the ETH high or low gets taken out. So why am I short? To get the profit taking and then position long for this and up higher. So that's my trade plan. I'm sticking to it. I am risk neutral. And I'm going, now this is a problem. So right here, if this is the retail price, follow the yellow brick road, I call this, and I get my buyer here, what do I know? What I know is I got stops under here, and I know that the buyers are here, and I know that the buyers are here. So I need to get under here. So let's look. VPOC migration. So far, so good. Now, this is where things are going to change. And nobody knows, this is just part of the thrill of randomness. So I'm looking for what? This. And to go, on the yellow brick road here. Now, I break above, and now my variable high volume node. Let's talk language for a moment. The auction is a language, okay? And the idea of this is if the volume and the price are moving lower, it suggests new retail pricing, that this is too high. So I'm going to be watching for if I get my sellers, do they get absorbed and where? Well, as soon as I get VPOC migration, that's important because now I have a new retail price. I have my sellers here, and now my buyers get above my sellers. So I got my sellers here, my buyers are here, my buyers were there, and they are still active. The idea is, can we break down? And this now is too high. Resistance. Boom. Taken out. Okay. And we get the target. So I go, well, that didn't work out so well. So that's a scratch. So now I'm going, well, I think that's it. I better get long. Now, how do I get long? This is my first long right here. Let me show it to you. Now, what I'm doing is if I find too low, which in hindsight is all you got, I break above resistance. I have my buyers. I pull back. I have two locations to get long. I have here, over here, not here. This is resistance. If I break up, pull back here, and I get VPOC migration, I can get long here, or I can get long here. So this is a long. Going for that. This is a long right here. This is these are advanced structured concepts going for there, and then going out the top. Let's see. Pull back the mid and VWAP. So long here to there. Pull back here. Now, what I do on something like this is I'm keeping my stops way outside. Where does this trade fail? Well, it's all the way back here and out under here. Well, let's just watch it. VPOC migration. This is too low. That is too low. I'm into the liquidity. Now look at the sweep. The sweep suggests counter rotation. I get my sellers. I come to my VWAP in mid. Now, the possibility is, if we think we're in an uptrend here, to keep going. Why not? And what really got me going, if you might say, is this, because I know I have a level below that's very important, and I couldn't get to it. So I perceive my buyers are in control. So for me, it's trend up in a higher time frame, and then only outside in trading or mean reversion trading or longs. Let's look. Now, we come up here. I'm running my stop under here and here. Right here, I look at it and I'm thinking, well, I have a couple possibilities. This is going to be, the context is mean reversion, which is outside in. I also know I have my stops under here, and this was my support. I get taken out, I take a loss, and then we get this thing. Okay? Actually, scale and, yeah, but I took a loss. So then we get the news. Okay? So now I'm getting, I think the word is annoyed. Is that the right word for this? And we had liquidity resting at 5,500. I don't know why it's not showing up in here. So the idea was, so when I got the news, I had no way back into this thing. You know, I came back here. So I get this and I'm going, what, you know, I'm just muttering the same things you might, because I get taken out and then I get this. And we were going for targets. I thought it was 55. I really do. I can't remember now. Maybe, where was it? Yeah. So we pulled back here. I get my sweep, and here I take another long, and I'm going again, because I'm thinking to myself, well, that's, you know, pretty aggressive. I get my sweep. I pull back here. Now there's two trades here. There's outside and there's outside, and this is the volume point of control. So I know overnight high is over here too. If I pull back to this high, and I know right here was excessive, you know, it was just nonsense, and I have initiative behavior, and I just squeezed everybody out, that I can look for a long and at least test this again. VPOC migration, and then 55. Right here. Just ahead of it. So it was right up here. Yeah, this was it. And look where we come here. Again, this is crazy to try to trade, okay? Just crazy. And there's another thing here. This is the outside edge of the distribution. This is called mean reversion. And yeah, this is real mean because of this volatility. I mean, this is very hard. It's not my thing. I mean, I have as much trouble as you do. Nobody is immune to volatility. So the way I look at this, and I posted this in Trader Lab, is this is outside in trading until it isn't. So I got my, this is luck. You know, I posted this in Trader Lab, you know, luck. Luck helps. So I come outside. This is the outside edge. It's a low volume node. And what that suggests to us is this, mean reversion trading. So at the moment, trend is up, rotations outside are longs. This sets up a long. Luck. Oh, there's your 55. There was two of these, I think. We come back here to full session VWAP. This sets up for me another long to here, and then I'm looking for 55 again. Mean reversions, just longs. Back there. So I'm going, I got you now. Yeah, you got me. Or I got you. And this is my next target, and then I'm looking to come out the top. Next target. So I thought this was pretty good. Long, variable high volume node, alignment, mean reversion, back here for the scale, here, and one for the, the Hail Mary pass. And I get taken out of it. So I'm going, oh, this one also. So this is where I just started getting, you start talking to yourself and it's not kind to the market. So this is what this is. Outside to here to there. Outside to there to not so much. Okay? Now, where was my target coming down from the early short? 28. And I go, well, look at that. And that's it. This was my last thing. So now I haven't seen any of this. Let's just see what we're doing. Okay. So not an exciting morning for me. I felt like I might as well just step on a rake a few times. How about you guys? Now, there is another trade here that I always like to talk about. It's a structured trade. Now, remember, in the Trader Lab, it's structured, what I call structured trades. In other words, you know what your trades are. You know where they'll show up. You just don't know what's going to happen, and there's slop. This is a structured trade. Now, let me explain. There's two things here. If the market kept going, I know there's stops up here, and all we did was get some stops out here and exhaust. Okay, and let's look at the icebergs here. 700, 1100, 1200, 3000. That's what was hanging out here, and this was the obstacle, 5500. So this is a heads up right here. The other thing is I posted in the Trader Lab to keep watching the limit order book because even though when we rotated down, let me show you if I can show you this. I think I can. Maybe I can't. What I wanted to show you was in the limit order book, let's see if it'll show up here. 55. Let me just see if it shows. Because what was happening is I was watching this and I posted in Trader Lab. Watch the liquidity here. Does it start pulling or is it being added or is it stable? This is how order flow can help you. This is a buy sweep. All of this suggests counter rotation. Let me just see. So the next structured trade is something called the IB continuation trade. Where's our variable high volume nodes? Here. If they are support and now we leave and we break away, which, right here, everything was copacetic, as they say. This is a long, and this is the failure. Breaking under here is the failure. Now, the next trade is called the IB continuation trade. It shows up here. Let me show it to you. So this is a structured trade. It's in those 60 PDFs. So right here, looking at this and let's go. So at that point, not so much. So if we take out and there's over 90% probability we take out either the first hour's high or low. Given the trend, I was trading mean reversion, I was looking at this probability. If we go the other way, then it is responsive and the sellers have taken control. So anyway, this was my last long. And then I just said that's that. Well, I can't trade when I'm streaming. That doesn't work out so good. So because I don't, think about it. Would you be trading and taking live trades while you're having a phone conversation or, doing something else? Probably not. So this is the IB continuation trade. I'm going to show it to you. And it's a structured trade. It's in the 60 PDFs, and it's reviewed quite a bit in the webinars that are available to you in TraderLab. And if you're just visiting in YouTube, there's a link down there if you want to visit the lab, no cost. So right here, when I break from here, I get my sell sweep, and I'm looking for the potential of a counter rotation. My liquidity is here. I break through the liquidity. Now this sets up an advanced process. The trade is called the IB continuation trade, and let's look. So the IB is here. The high volume is developing there. If I come outside, I have a couple things. I can sell this. This is advanced. This is a short because you know there's stops under the first hour's low. So this is your sweep, buying iceberg, sell stops, retracement. This is a short here, and or, let me give you the or out in here, and this becomes mean reversion. So let's look at how this works. Back here, structured trade. Let's look at it a little closer. So this is advanced, so not your thing, not to worry. Test, too high, break, trigger is here for this. Again, advanced. Let me draw a little box around it. This would be my next trade if I wasn't going to stream. So what I do is I just trade the context until it changes, and typically what happens for me is I just trade the structured trades plus my other trades that I have. And I don't try, and if I see selling, I'm using it until it breaks structure. I'm going to use it for reversion trading. So right here, anyway, this is a short, but let's look at the more structured trade. It's going to be back here. Let's look at where the high volume is. Now I'm going to start throwing some pieces together in here. So I have the sellers. So here's what you have. Buyers were here. See the iceberg? Absorb this seller. Buyers were here. The sellers absorb the buyers. Selling icebergs. Break. So the buyers are here. And now the buyers are here. That guy was absorbed, the seller. Buyers are here. My location, my resistance is here. When I break under here, these guys failed. Now I have my volume here. Where did the sellers take over? It was the buyers are here, don't forget. So this becomes my location. I'm going to put another little box around this just so you can see it. Let's look at it. And this creates structure. So the output of order flow is price action structure, if you will. So this is a selling location. It's advanced. This is a selling location, and so is this. And this trade fails up here. And this is the location for the IB. Okay, let's look at it. Now, where are we trying to sell it? Up in here. Right here is your short. This is a structured trade. And I do this to help traders understand structure. And this helps you with the auction. So this is your structured trade. And I'm just taking time here to show you how you might do this. And then it fails here or there, So what I always suggest, and you have to vet this, is once you have the structured trade and you have a trigger, then you have this. You put a limit order here, 1 tick below. You put your stop 3 ticks above where it fails. Now, that could be there or there, And then you put your helmet on, and you want to get risk neutral. Notice what comes in the book. Sell sweep. trade management opportunity, exit, or nothing. What's your plan tell you to do? See? Now, I'm going to put some other levels on the chart here, and if you have questions, why don't you ask your questions? No comment. Are you in the Trader Lab? Let me try to get these levels working. One moment. Just checking. Okay. Okay. So let's go the other way here. Let's see what we have for targets. This is important. Okay. Everybody knows it's there. We had a sweep here, sets up your counter rotation. This is an outside edge. What is this? This is mean reversion. We're under this level, 54.28. Let's come back and look at our higher time frame and see if we can't figure out some targeting. So we're under this. So subject to, we can come down anywhere, right? If we get down under 54, which we're coming to right now, this is an important level, the top of this distribution, then we can potentially come back to 52.25. Maybe now, maybe not ever, maybe never, doesn't matter. You just manage your trade. This is the fair price here. And in the next higher time frame or intermediate time frame, it's 5,300. Remember, yesterday's targets were 5,300 and 53.25. Today, if we come down here under the 54, then we're potentially coming back inside. That's what I know. Other than that, I don't know anything. So I don't need to know anything. And what was support over here? 28. We're below it. So that sets up coming back into this range. So we'll see what it does. That's not material. What's material as day traders is once we understand the condition of the market, we trade in the direction. And I think we basically picked off shorts in this volatility, and based on the structure, we're going back, we're reverting back to the mean. So we got to get through this, and this is support at the moment. So if you're in Trader Lab, what you might be doing is just targeting this, and if you have a runner, you manage it, and we can counter rotate and come back up here. What this is a low volume node. It's sitting right here. What a low volume node is we can rotate out here or even up here, doesn't matter. And if the trend we think might now be down, we're going to be taking shorts for continuation trades. So that is not a recommendation. It's just the condition of the market. And part of having a trade plan is to be able to define the conditions and also when the conditions change. Conditions have changed. So now so think about what we had this morning. We did not get our responsive selling, which was the first part of my trade plan for today. Just my plan. Remember, my plan does not predict anything. I just try to align with behavior that I understand and that I've seen many times. We got a little bit, but not to our target, my target, I should say, which was 28, wherever it was. This. So that was the short, didn't work. Then it was get long to 55. Can't get through there. The IB, which was the plan, fall out the bottom, turn the barge around, and now it's short. And now instead of being outside in trading for the long side, it is now outside in towards the short side. So it's a reversal plan to now get back in alignment. So, and I tend, and I'm not saying it's a good plan, I'm just saying it's mine. And, but over time, it works out pretty nicely. And I'm always getting out of alignment because the market changes. And if the market sometimes is very orderly and auctions very cleanly, and other times it's a day like today where news and thinness of the book just makes it very hard. Anyway, that's the last structured short. And if we can get below here, which is a strike, then we can continue. And we might fill the gap. I don't know, but that would be juicy, don't you think? And we have these levels. Remember, this was the retail price from yesterday, the highest volume. This is the micro composite volume point of control, the 5,300. So what can happen here is if we found too high, then we can come back here and fill this gap in. So we have a gap here. We have all these gaps. So we can just come down into this. But this would not be unreasonable to come back here. So what we did is we went up. We got some stops. We failed to get over. Remember, the key location is this. Now, when we were on the long side, I was thinking to test to this because this is where it's too high. Now, when I'm thinking, this is not, I want you to know the difference. It's always the possibilities, and it's not predictive. It's just what might happen, and then you trade towards what might happen until it doesn't happen, and then you have a change. And then if you have a change, you got to turn the barge around and start thinking what might happen now. 54.28, get below 54, then maybe here, and then maybe 53, and who knows, right? So that's trading, at least a way to trade. I'm not saying it's the best way to trade, but it's a way. And it's an organizational process and a process of probabilities. It's for you, your job, if you're going to be in this business, is to just understand it's plan-based. And when you're in high volatility and the book is thin, you're going to have a hard time. Because when the book is thin, it's going to go beyond levels. Levels are not that material. Once you have stops and the book is thin, those stops are going to get filled. They become market orders. And if you don't have a lot of liquidity to soak up the sellers, it's just going to keep going until they're filled by the passive side. We're below this. This is important. So only no longs at the moment. If there is a long, it's to cover a short for trade management. This is right here a potential add. It's not a recommendation. I want you to look at what happened here. So we had a short here, advanced process. We had a short there, structured trade. And this is also similar to that. So let's see what happens. So if we, right here, it is suggesting the potential for a rotation. We're going to watch this level. We have targets below. So let's just hang out together and see what it does. Do you have questions? Post them there. I'll take a look. Also, if you're interested in the Bookmap Discord Trader Lab community, there's a link in the bottom of YouTube. You do need to confirm, get verified in order to have access to all the Bookmap server. So that means access to the streamers, access to the special events, contests where you can win free subscriptions to Bookmap, all kinds of interesting stuff. Stocks, options, crypto, of course, the Trader Lab, and a lot more. You can use the QR code. You do need to get verified. Now, if you are a Bookmap subscriber, you just verify using the email that is connected to your license key. And if you're not a subscriber or you use Thinkorswim Bookmap, all you need to do then is create a free digital registration. So, and it'll take you to where to get verified. And it's very cool. I did it very easy. I'm even verified. And if I wasn't verified, I'd be out. So, and remember, if you come to Trader Lab, there's 60 PDFs of these structured trades, the Trader Lab community, and a library of webinars that you guys can take advantage of. So do that now while you're hanging out, or if you're viewing this later, scan the QR code or use the link in the bottom of YouTube if you want to come to the Bookmap Discord Trader Lab community. this did not, I mean, this is a little too quick. All right. So it may not come back, so there's nothing to do. So if you can execute it, that's your call, not mine. So this, yeah, this did not come back. So there's no add here for me. There's our gap. Seems like a long way to go, doesn't it? But it's not for us to say what it will and will not do. What do we do? Manage the trade. Where's this trade fail? Well, right now above here, but there's more. You see this out here? This is a low volume node. What it is this is an auction. The retail price is sitting right there. So and we can rotate around this, and we can come out here. I mean, we can go anywhere, right? So we can't predict that. But I know if I get a counter rotation, I have resistance here. I have a low volume node there. That's created by the breakaway. This break, it leaves this little gap. And this little gap, there was no chop, 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 which is an auction. It ran from there. So there's no volume over there. So the market has a tendency to come back to these low volume areas and check them. And there's typically stops also at these outside edges. So the market could come back, rotate into stops, and if it exhausts, continue down to the high volume. Right now, we're just, like sinking into the abyss. So you just manage your trade, and if you get taken out, that's just what we do. So we might be getting our counter rotation. High volume is here. This is like your VPOC. So in microstructure, what this is about is outside in mean reversion trading. If you have a trade plan for this, you would be looking outside in for continuation trades unless we violate structure and come all the way back up, which we can do. But right now, outside is here. So if I get a rotation, I'm again, and these aren't recommendations, I am looking out at these levels and out here. So you know the locations now. And if we get a location, then this is the target for a scale. So it has to fit. And then continuation. So if you get short, you got to have enough range, which you might, to get here, assuming we get above this. This is our resistance right here. So if we can get above it, then we can come here. If we can't get above it, this is your current retail price, then we're going to reject it. We keep going. If we squeeze out, all we're doing then is pulling the stops out that are above here. And that might be it. And I mean, that we don't know. So there's stops here, here, here. Sellers are here. And here's kind of the thought process on this. Let's say all retail traders are trailing stops to some extent someplace, right? Where the weak hands. Most traders are going to be up here. And some are going to, whatever they do, right? If the stops are here, what I want to see then is if I take stops, what happens? If I come up here and pick off the weak hands and break here, that might suggest south of the border. If I come out here and come up to the stops here, then I'd be looking to sell from out there because this is the mean. I can only get short out here for a new trade, initiative trade. If I come back here and I can't clear this, then down, unless the buyers that are here come back in and absorb the sellers, and then we squeeze. I know that's the possibilities. I don't know what it'll do. That's what I know. Good to know what you know, and it's good to know what you don't know. And most of it in trading is you don't know because you can't predict. I do know why this happens. What I don't know is if I'm going to get above here. This is my resistance. This is the same as a VHVN or anything else, any other VPOC. It's the same as these HVNs. It is an HVN. What is an HVN? An HVN, a high volume node, is pricing. It was the retail price. If I fall out, it is saying at the moment, and this can change, that's too high. Now I move down to a new distribution and I start the auction over here. What's too high? What's retail? What's too low? And if this is too high, I'm going to break away from it and start another distribution. If it's not, I'm going to rotate around and come up in here. That's what I know. So here's what I know. Structure is there. Structure was here. This is resistance. We got it stops. We got selling. I got my buyers were under here. There's absorption. There's liquidity. And I just have to manage my trade. That's all I know. So no magic. Nada. You got questions, guys? And I really want you to know, for me, this is one of those days where I just want to, just go. Should have stayed in bed. Justin, we've got news algos, but they're probably not doing anything at the moment unless there is news. And all we have in here now is rotations. So it's tradable for me because I have a plan for it. I also going to take stops. My job is to get risk neutral. That's job number one, risk neutral. So if I get short here, risk neutral. Wherever I'm getting short, and I can't get short there, by the way, I should say. The IB, wherever that went, was the last structured trade, which is I lost it. I don't even know where it is. Lost it, doesn't matter. But now, see what's happening here? So let's watch this. This now, so we have resistance in this location. And we have our outside edge up in here. So we want to watch the behavior now here. So we're pushing outside. Next resistance is here. I don't have a sell. So I don't have anything here. I'm just going to watch levels. So what do we know? This is too low at the moment. We came across the low volume, and now we're back in this distribution. So this was the last price that was too high. So we want to watch now right here. If I come across here, I can keep going out here. So this is just now an area to observe. Remember how this works. It goes from distribution, and if this is too low, now that's an area that we'd have to clear to go lower. Now, this is the next layer to observe, then up here. And these aren't trade recommendations. This is really auction mechanics. And now the other part of this is if you don't have a trade, you just sit back, you don't do anything. Now we have to look a little further. We have an outside edge here, and we have another edge here. So let's just see what it does. I got my sweep. So this is important right here. Let's see what it does. Important area. See the fight right here? Let's just watch. Selling icebergs, buy stops, icebergs. So we want to watch the behavior in here. These aren't trade recommendations. We're trying to read the order flow. These are algos right here. The way to think about this is this was a price that was too high. This is a price now that is too low. And we have to be thinking about the outside edges of these, because the idea of this thing is that it can do this. But we have to see how far it pushes. We got to watch. So let's just watch this. Sweep. Pretty tricky, huh? Ma 220. This is structured trading. Algos are in there every day. So it's really trade plan. So if retailers are confused, it's the ones that don't have a plan. And if it doesn't fit the plan, then there's no confusion because then there's no trade. So that's just the way I experience it. Sellers took over here, and you could see the test. It's not necessarily a trade anybody ought to take because you got to be thinking about, how far outside are you? You can get to the LVN, you see. So for me, and it's not a recommendation, this is not a trade I would take, and I don't care if it goes to zero from here because my requirement for me is to have enough range from entry, which would be over here, to get there, to get risk neutral. I can't do that. So I don't trade it. I have to be further outside to come back here. So that sets up out here. So if it doesn't get there, I just sort of hang out and let it go because it's not my trade. I understand the trade from here, but I understand the auction could care less about what I require for risk reward, which is here. So it doesn't fit. I can't trade it. And if I'm making trades up, I'm on my way out of business. Been there, done that. Not interested. Have you been there? And are you still doing it? Because if you see trades all over the place, then you're not there. You have to be looking at levels and what it says. So we know this is our outside edge and this is the mean in the distribution. If the trend is down, we're trying to get short to come here. But where's our range? We got to get outside. So I just want to stress to you guys that my trade, and not a recommendation, is shorts, outside rotational trading. It's called mean reversion. And if it doesn't fit from entry to scale, this is like 3 points or so. That's like a shoehorn for me. And my stop has to be here. So if I get into this thing, I can't enter till here, but 12 to 10, 2 points. So if it goes down to, from wherever, I just don't have anything to do. If it squeezes further, I do have something to do. It's not a recommendation. Look at this thing. Do you guys have questions? By the way, how to get the Trader Lab? You can get the Trader Lab using the link in the bottom of YouTube. If you're a Bookmap subscriber, you need to verify your subscription with the email that you used. That's part of your Bookmap subscription. If you do not have a Bookmap subscription, it's still available to you at no cost. The full Bookmap server and all the additional education, order flow, options, swing trading, market maker behavior, algorithmic behavior, a lot more. It's available to you. All you need to do is verify. You need to not open, but you just need to verify the email that you use to subscribe to Bookmap that's connected to your license key. And if you aren't subscribed to Bookmap, it's no problem. Or if you have Thinkorswim Bookmap, all you need to do then is create a free digital registration. And you can use so we're watching out here, okay? So we're in this outside edge. This is where we want to be looking. We have this sitting up here. Let's watch. Not a recommendation. So right here, I'm looking for a trigger. And I know what I have sitting here. I want to watch the liquidity here. Do they pull? What's happening? I'm back at another high volume node. And right here, I want to look for return here. Not a recommendation. I'm just watching levels now. Let's see what goes on here. And I got to look back at what happened last time we were here. Stops are above here. So high volume is there and high volume is up there. Dim Dim, thanks for the question. You really need to look at higher time frame integration. Almost every stream I do, I go over the condition of the market. So it's pushing through these. So as it's pushing through, I have to keep looking outside. So I have nothing here to do. So if you were in these shorts, you'd be out of them. You have to be out of them because you'd have your stop at different levels. Once you come across here, then forget about it, as they say. The low volume node is the outside edge. So if you were looking, for it to come back here and it doesn't do it, then there's nothing to do. So I'm looking for shorts, but currently I don't have any trades. So I'm pushing through levels. So this is too low. So I was looking out here and you can see nada. I came here. So I looked at this. Zippo. It actually turns into a long over here, which I won't take. And now we're coming back outside. And this is the outside edge. So it can do anything. I'm below this key level, 28, and I have a buy sweep. This sets up a potential rotation, but this is sloppy. So I personally, I'm just okay if I didn't trade any of this now. I would just wait. There's just no reason to do anything. I think the IB is here. There's going to be stops sitting up here. So I don't have anything. By the way, if you're interested in TraderLab, and remember, the job in the business of trading is to wait for your trades. If you don't have a trade, you have nothing to do. Our business is not built on action and the need to do something. Our business is built on edge. And when you don't have an edge, I don't have one at the moment. I have levels that I'm going to observe, because if I can get further outside, I can still come back here. So I'm still looking, but I got to be conscious of the buyers that are here too. See, if you look at this, the buyers have taken over. Where's my sellers? I got my buyers, I got my buyers, I got more buyers, I got more buyers. Now, buyers are made up of buy stops, and I have my icebergs back in here. So I want to watch in here. So if I take a short anywhere along here, I'm coming here. Okay? And the other thing you got to be aware of is the stops. So when I start looking out here, I'm looking at structure and I'm looking over here. So stops are here. And then, of course, we have this thing up here. So I'd be low. This can come back up here, and this could set up another short to come back here, or the short's going to come from one of these outside edges, and it's going to come back here. That's what I know. And then it's up to your trade plan. Do you really want to take a short there? Or do you want to get more stops out and maybe have no trade here? Just sit. I'm a little bit more of the patient. Not, I gotta. Or if I'm in the hole for the day, I do not go into, I gotta get it back. Now, Hyde, the lunatic, is going to, you'll hear that in your head. I got to get this back because you're looking at your P&L. Well, your P&L is just the outcome of following a trade plan with an edge. See this? And this is what you got in here. Is that a trade you ought to take? Well, almost a 10-point rotation if it gets there. That would qualify. And if it doesn't get there, you have the pleasure of taking a stop. Your outside edge is out here, and we can still come above this. So we'll just see. So we got some sellers here. Obviously, the buyers were pretty aggressive, but if it's a squeeze, and now we have some icebergs, and we have selling icebergs, then maybe this. So what would you do with this? This is your trigger. This is your test. The buyers, see the sweep is here. That sets up the potential for the counter rotation. So you have a sweep, you have micro high volume there, and you have your outside edge. So what was I looking for? I was looking for outside edges to come back to the mean. If I push outside, I'm looking at the next one. We just blew through it. All right, where's the next one? It's out here, and I'm under this. So what does that do for me? Well, I might come here. So if you're going to work mean reversion, it's a specific plan inside a plan. And it's a little conflicted if you think about it. Is the trend up or down? Well, it's a great question because it's a bit of both, isn't it? So you can be thinking, is the trend up or down? I have to tell you, it depends, right, on the time frame you trade. I've been trading primarily the short side up until today. So, and I think yesterday was all short, longs. Okay, but primarily the short side. Now, are we in a transition here? Are we going to go back into a bull market, or are we just squeezing? And now we found our sellers because the function of the market is to try to figure out what's too high, what's too low, you know? So you would have a scale, unless you're going for this, which is still mean reversion. So if you didn't scale, then you're going for this. And if you get squeezed out, then you'll take a stop. It's one or the other. If you're strictly trying to get risk neutral, then the worst that will happen is you scratch, and then you're going for this and out the bottom. So this is trade plan specific. Risk management. Trigger, test, you'd be scaled. Your stop would be above here, 3 ticks. You get taken out, scratch, broker sends you a gift basket and a love letter. Or after scaling, you're either scratching or you're going here and under these stops outside here come down. If that doesn't work, you'd scratch or you take a full stop if this was your scale. One or the other. It's all part of your trade plan. That's just trading. There's nothing more to this. You guys have questions? The icebergs help because I can it helps me see. Now I know the limit order book is here, right, on the other side. But when I see large icebergs, it certainly means a lot more than just seeing 40, 30, 6. When I see 400, 700, that's more selling here. So if I know I have sellers here, that acts like resistance to me. Because if the sellers are here, the possibility is if I come up here, they're going to sell some more. Why did they sell this? Well, I thought this was a heck of a good price to sell. So if I come up and squeeze, they may come back in. So we have to see what happens. And if we just keep going, then, the trade is over. So we'll see what it does. Remember, our outside edge is over here. So we'll just watch this. This is a structured trade. And remember what the element was, why I wouldn't be able to take it wherever it was lower, because there was no range. Here we have structure and range, you see. Now this might not be your trade, and because what can happen here is if you're mechanical, you'll be selling this, taking a stop. You'll be selling this, taking a stop. Selling this, maybe take a stop, right? So, and then you could be done for the day. So this might not be your trade. You need to know where your trades are, the ones that work best for you. And the only way you get to that is by doing the research and trying to identify the condition of the market that the trades are aligned with. And over time, if that actually has an edge, you'll extract it. If you're having random winners doing this, which we all will have, by the way, but over time you're still losing, you don't have an edge. That's not a trade you would continue doing, right? Or it's a trade you would try to improve because you have to find why it doesn't work as much as why it will work, and define the conditions that give it the edge. And that's what trading is. It's defining conditional behavior and then what plugs into the current condition that gives you an edge. And of course, all trades can take stops. And of course, the condition can change while you're in the middle of trading. It goes from longs, and then you're taking longs, you take a stop, you get thrown under the bus, and then you go, oh, the condition has changed. And then you realign. That's it. Anyway, we're looking for this, right? So theoretically, if you took this trade, you'd be risk neutral. You need to get under here to get out here somewhere. And I'm giving you the or you're going to scale here because this is mean reversion, and this is the mean in this distribution. The highest volume is the mean. And you notice, remember how we do rotations back to the volume point of control? This is the same trade. And this acts like a volume point of control. Tappish, mean reversion. Are you guys following? Remember, if you're interested in the Trader Lab, there's no cost for it. So there's either your scale, if you, as Dirty Harry would say, do you feel lucky? Or you're taking a price-based scale, so you're risk neutral. But this is mean reversion. So this is, now, is there any precision? No. Where are we trying to go? We're aligned with maybe a trend, which currently is down. We have a gap below us, and this is the fair price in this distribution. Who knows, right? Remember, I was looking here, no bueno, no trade. Next, sweep, structure, micro high volume, it's right there. It's up here in a fractal. Sellers take control. Test, short, 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 scale or scale, hold. And now looking out here. This is a structured trade, but you got to understand, if you're just putting this thing on mechanically, you're going to have a problem because you can hit your loss limit just being mechanical. Putting an order here. Well, I don't have anything here. Look at it. So, and then here, break high, support. If we broke low and tested, then back here. So what did we do here? We broke low and tested. Here, we broke high and tested. Uh-oh. Next, broke low and tested. Short. See the difference? You should screenshot this because this is the kind of stuff you need to work on. And if you understand it's random, then you got to be thinking about the sellers in this leg. Their buy stops are trailing them. if I get buyers, is it a change or is it just a squeeze? Remember, the market goes up to go down. The market goes down right there to go up. The market goes up, trigger, to go down, support. The market goes down, short was here, no trigger, to go up. To where? I don't know. To squeeze these guys. And where's my outside edge? Isn't it there? So this can be the following. And what else did we do? We got this too, right? So I got support out in here. So in mean reversion, your trade could just be there to there, and you're done. All you're doing is trading this. Or, let me give you the or. You sell this, you scale here, you scale the outside edge, and then you throw the football towards the end zone to fall out the bottom. And if it doesn't, then you're going to come back. And then it's trade management if you're running a 3. If you're running a 2, it's really this to this to this to that. Does that make sense? That's rotational trading. Ben, how many points does my stop need to be? Structurally, if I get short here, I'm using my, for developing traders, the stop needs to be based on your research. This morning with the news, stops were kind of useless. That doesn't mean I don't put them in. It just means they're ripping through and structure was being violated. So it was a very frustrating morning. I had some, I think, pretty good trade locations, and then there's a hiccup or somebody says or tweet, all bets are off when that happens because the auction or the flow of the market is disrupted. So at one point I was running much larger stops. They're tighter now, but it can always, if a tweet or a comment comes out, you're going to get thrown under the bus, Ben. So you need to know in your trade plan. For me, I can trade now with a tighter stop. And I don't change much what I do, except if the volatility gets really high, I'll cut my size. So I don't change my size. I cut it. So if I have to increase my stops, out to 5, 6, 7 points, whatever it is, then I've got to adjust. I try to keep my risk fairly constant, so I'll go down to micros, so if I want to cut in half and double my stops, I'll just basically run the same sequence. So let's say 3 lot or 4 lots, but instead of, let's say, minis, I'll just go down the micros and just basically trade instead of a full mini, like half minis for each position. Doesn't matter to me if the volatility in the ranges there, it all comes out, doesn't matter. And then if it calms down again, I'll go back either the minis or if I'll lower my stops. I just adjust on the fly. Also, as part of my plan, if things get completely out of hand, like with the risk, and I'm starting to get emotionally frustrated, I know the feeling, I know what happens to me, and then I'll just take a little break. Our nature is FOMO and to make it back. And in the past, when I do that, it hasn't turned out so well. In fact, it never turns out well. So when I feel it, I recognize it. I know where it's coming from. It's fight and flight, and it's FOMO, and it's, I'm in the hole. I got to make it back. As soon as those thoughts start going through your head, you are going on tilt. And you need to have a circuit breaker to recognize tilt. And that takes practice and discipline. I always say in the stream and elsewhere, and to the Trader Lab participants, the hardest part of this business is not figuring out how to trade. I believe anyone who comes to Trader Lab can learn how to trade. The hardest part is actually doing your job, controlling your emotions. That is the problem. If you know how to trade and you can't actually do it, in other words, follow a plan and control your emotional state, it doesn't matter if you have the best plan. Casinos are not attached to the outcome. You have to consider when you're thinking about your behavior and your outcomes, how does a casino operate? That is the business model we are emulating because it's successful. They don't respond emotionally when they pay a gambler. They don't try to make it back. What they do is just play the next hand exactly the same way and rely on the statistical edge to take care of their need to extract dollars from the gamblers, but they're in a random environment. We are also. So if you're not following a vetted, structured plan, then you might be sitting with the gamblers. And you're going to have winning hands like the gamblers do or winning trades. But if you don't have an edge with that approach, in spite of having winners, which are always going to try to curve fit and make better, you're on your way out of business. It's the most frustrating thing because as retail traders, we don't understand the business we're trying to be in. In fact, I have a webinar I did called Trader Groundhog Day. There's a link in the bottom of YouTube if you're interested in Trader Lab, you want to visit. It's a community of like-minded traders who have come together to leverage their collective experience. This trade would be over, which is okay. It's a mean reversion rotational trend. And you can learn structured trades. They're available to everyone. There's 60 PDFs of these. You can use the link in the bottom of YouTube. There's a library of webinars and, of course, the Trader Lab community, and there is no cost. If you want to visit the Trader Lab and you're visiting in YouTube, or if you're visiting even in the Trader Lab, you need to get verified to have continuing access to the Bookmap Discord server. That includes all the streamers, all the special events, the contests where you can win free subscriptions to Bookmap. There's a lot going on in here. You need to verify. All you need there is scan the QR code. If you're a current subscriber to Bookmap, all you got to do is verify the email that is connected to your license key. And if you're not a Bookmap subscriber or you're a Thinkorswim user of Bookmap, all you need to do is create a free digital registration. And there's no cost. But the reason for this is, in a server like Discord, you're going to get phishing, all the nonsense you get in there, imposters, spam, and we want the best experience. Bookmap has worked very hard to create a very positive experience and a great environment for traders, and there's no cost. But in order to make it the best environment can be, we have to try to tighten up, keep the bots and all the nonsense out. I hope you guys understand, and I hope you appreciate it. Please get verified if you want continuing access to the Trader Lab. You need to do that before Saturday. Don't put it off if you want to have access to the chat, the Trader Lab, and all the materials and support that is in there. Thanks, guys, for visiting Trader Lab. Please give a like, subscribe to the channel. Appreciate you guys stopping by. Hope you got something out of today. Not the easiest day to trade. A lot of volatility and news interruptions. It's just the real world of trading. If you're interested in the straight oil from the can, check out the Trader Lab. Check out the community. We're all there to help each other. It's an advanced trading process. And like everything in trading, the outcome for you and everybody else will be random. You need to understand the business. And if you're interested in learning what the business is, I'd be glad to share it with you as well as the other participants in the Trader Lab community. Have a great one, guys. Please give a like on the way out. And I look forward to seeing you tomorrow. And trade safe.